Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. And today we're diving into some new debt issuance from the Federal Home Loan Bank of Dallas, which sounds a bit dry, but trust me, it's all about where the money's flowing. And for this one, we'll be keeping a close eye on those numbers. So if you want straightforward insights into these kinds of documents, make sure you're subscribed. We also have a Discord community linked in the description below, so swing by there if you're looking for more company analysis and discussion. The Federal Home Loan Bank of Dallas, or FHLB, Dallas as they sometimes call it, is basically a big financial institution that helps out other banks and mortgage lenders. They get their money by selling these things called consolidated obligations, which are like Uncle Sam is footing the bill if things go south, like Uncle Sam is footing the bill if things go south. Now, let's cut to the chase. The really interesting part of this filing is a look at some specific debt that FHLB Dallas is planning to issue or has committed to issuing. Think of this as a sneak peek into their upcoming borrowing plans. We're looking at a table here that breaks down these planned issuances, and we want to focus on the key pieces of information that tell us what's going on with their money. The first thing that jumps out is a commitment to issue a bond with a trade date of July 9th of this year, 2025. This is the date when the deal is essentially agreed upon. Then we have a Accession number, which is like a social security number for financial securities, and this one is 3130B72Y9. It's a unique identifier for this specific bond. This bond isn't a short-term play, it has a maturity date of December 17th, 2026. That means investors who buy this bond will get their principal back in a little over a year from now. And the interest rate or coupon rate on this particular bond is set at 4.30%. This tells us how much the bank plans to pay investors in interest each year for lending them money. Finally, the par amount, which is the face value or principal amount of the bond, is a hefty $15 million. This is the total amount the bank plans to borrow with this specific issuance. So in simple terms, FHLB Dallas is planning to borrow $15 million, paying 4.3% interest on it, and will pay it all back in December of next year. Now, this bond has an optional principal redemption type. What does that mean for us? It means the bank has the right to pay back the principal amount earlier than the maturity date if they choose to. And the call style is Bermudan. This specifies when they can exercise that early repayment option. In this case, it means they can redeem it on specific recurring dates after a certain point up until maturity. It's a way for them to manage their borrowing costs if interest rates drop significantly. The rate type is fixed constant, which means the interest rate of 4.30% will stay the same throughout the life of this bond. No surprises there. Interestingly, the next call date is October 17th, 2025. This is the earliest date the bank could decide to pay back the principal early. And who's signing off on this? Sue Cassidy, Vice President and Director of Financial Reporting, has signed on behalf of the bank. This shows that the information in this report has been officially reviewed and approved internally. Looking at this, FHLB Dallas is tapping the capital markets, which is a standard way for financial institutions to manage their liquidity and funding needs. They're issuing a $15 million bond that matures in December 2026 with a fixed rate of 4.3%. The option for early redemption means they have flexibility to refinance if market conditions become more favorable, which is a smart move in managing financial obligations. It's a pretty straightforward debt issuance, and the amounts involved, while significant, are typical for an institution of this nature. There aren't any complex derivatives or unusual structures disclosed here, which suggests a focus on predictable borrowing. So to sum it up, FHLB Dallas is confirming a $15 million debt issuance maturing in late 2026 at a 4.3% fixed rate. This is a solid standard financial operation. It shows they are actively managing their funding by issuing new debt. It's not a massive undertaking that signals distress, but rather a regular part of how they operate. They are essentially borrowing money for a little over a year and paying a predictable interest rate. Now, from my perspective, the Federal Home Loan Bank of Dallas seems to be operating with a clear and structured approach to its funding. The issuance of this bond, with its defined maturity and fixed rate, indicates a conservative financial strategy aimed at predictable borrowing costs, particularly with the Bermudan call option providing flexibility without exposing them to extreme interest rate volatility. It's not a situation where they're desperately trying to raise cash, but rather a deliberate move to manage their balance sheet efficiently. The fact that this is a joint and several obligation of all 11 Federal Home Loan banks also adds a layer of security, spreading the risk across a larger group. It's not a situation where they're desperately trying to raise cash, but rather a deliberate move to manage their balance sheet efficiently. The fact that this is a joint and several obligation of all 11 Federal Home Loan banks also adds a layer of security, spreading the risk across a larger group. In terms of risks, like any financial institution, they are always exposed to changes in interest rates and the overall health of the credit markets. However, their business model, which focuses on supporting housing finance and liquidity for member institutions, generally provides a stable demand for their services. The key for FHLB Dallas, and indeed all FHL banks, is maintaining investor confidence in their ability to manage their debt effectively and support their member banks. Overall, this filing reveals a well-managed, albeit niche, financial entity engaging in a routine but important financial transaction. It's a good example of how large financial institutions manage their capital through the issuance of debt. What's your take on these numbers and what they signal for the Federal Home Loan Bank of Dallas's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.